Welcome back to the final instalment of our multi-part series on Block. In part 1, we explored how Block grew Square from its inception to a $150 billion payments business with multiple layers of competitive advantage wrapped around its profitability. In part 2, we then explored how Block took these learnings and created the independently successful US consumer fintech called Cash App. In today's part 3, we will explore the opportunities ahead as Block combines its two businesses together, where the intersection of commerce and money has the potential to create significant value. You can find the full written series on insights.ecpam.com or find our podcasts by searching ECP Asset Management on Spotify. Let's dig in. In 2022, Block launched Cash App Commerce in the US, a simple directory for Cash App consumers to discover merchants accepting Square and Cash App Pay. While only in its initial release, the marketplace establishes a discovery portal between both Block's consumers and merchants, and by owning the banking relationship, it can drastically reduce the transaction costs when funds flow between the two parties. To drive volume through this marketplace, Block must incentivize its captive Cash App user base to start their shopping journey inside its commerce marketplace. If it can influence the flow of consumer demand, it could position Cash App at the top of the commerce funnel. The key question, therefore, is how could Block turn commerce into a place consumers begin their shopping journey? Block needs to solve this problem to compete with the established shopping journeys today, whether it be at merchants directly because you already know what you want, or at Amazon for its free delivery, product reviews, and trusted pricing, or of course, Google Search. We believe there are two answers: financial benefits and personalized commerce. And we see Cash App having the ingredients at its disposal to bring both to the consumer. To understand how consumer financial benefits could be tactically used to drive consumer demand, we first need to establish some historical context. History is filled with two-sided payment networks that arose from providing a customer utility that aggregated demand and attracted paying merchants into the network. Diners Club and Amex were the original examples of these closed-loop financial networks, dating back to the 1950s. They used a financial benefit, the credit card, to aggregate consumer demand and then charge merchants a premium payment processing fee, now known as interchange, to participate in that network. In the 2000s, PayPal leveraged the utility of trusted e-commerce payments to build a dominant global merchants acceptance. And more recently, Afterpay showed that by flipping the credit model on its head with fee-free credit installments, a scaled consumer and merchant network could be built. Today, Cash App has 80 million active users in the US and has continually expanded its suite of services to increasingly emulate those provided by traditional bank accounts. With the launch of Cash App Borrow, Buy Now Pay Later, budgeting tools, tax filings, cash and check deposits, a subset of users are increasingly using Cash App as their main financial account. Many of these tools could be directed exclusively or preferentially towards transactions that occur within the commerce interface. It's not difficult to envision Cash App Borrow or Buy Now Pay Later being available for transactions exclusively within commerce, while shopping enhancement features like digital layaway could be linked to a savings goal as a reward for financially disciplined consumers unwilling to use credit for larger purchases, but equally unwilling to miss out on rare one-time retail discounts. By focusing access to financial tools towards transactions inside the commerce marketplace, consumers would have a reason to begin their shopping journey within Cash App. Following this, loyalty rewards can offer additional financial incentives to shop via commerce. Cash App does this today with its Boost Rewards feature, which provides customers with instant product discounts and is increasingly finding this being funded by merchants given the proven return on marketing spend. If Block can aggregate consumer demand and charge merchants premium channel fees, it will create a financial resource that it can then share the economic benefit with its customers, which would increase the reason to shop within commerce, speeding up that coveted flywheel whereby increasing consumer spend increases the propensity for merchants to participate in the network. To kickstart that flywheel, we expect Block to tap into its Afterpay enterprise merchant base, signing up big-name retailers and leveraging Afterpay's co-marketing playbook to draw consumers in. The network would then logically extend beyond e-commerce to offline retail. Block recently updated a pattern for generating multi-merchant loyalty programs based on complementary services and geographic thresholds, where consumers could be dynamically enrolled and receive incentives to conduct transactions with merchants in the program. With this pattern, it's conceivable that Cash App could bring a map feature into commerce, giving consumers visibility into the local Square merchants and their loyalty programs relevant to their location or registered address. Doing so would give the millions of Square merchants an opportunity to participate in the network as well. The second factor that will determine Cash App Commerce's success will be its ability to personalize its commerce offering, making it fresh and relevant to its user base. Understanding a consumer's shopping interests does require a historic profile. Without it, relevance and value add are hard to achieve, and that would risk dwindling consumer interest. While search functionality allows marketplaces to build a consumer's demand profile over time, a longer history of consumers' transaction activity could build a richer picture. Luckily, Cash App is increasingly serving as an active user's main bank account. Although privacy laws would prohibit consumer data being shared with merchants, Block could leverage these consumer insights from informed bank transaction histories to surface relevant content to its millions of Square merchants in the consumer interface, initially a centrally managed target marketing platform for merchants, and then surfacing the most valuable commerce offers to their consumers. We would expect personalization would extend beyond the what to buy, but also to incorporate the when and the how, based on knowledge of a consumer's payroll, all their credit liabilities and upcoming repayments. That's so to keep in line with Block's vision of financial empowerment and help consumers remain financially responsible. To wrap this up, we think that Cash App Commerce's vision is to create a financial hub where consumers can access highly personalized commerce, which draws upon the best retail offers, then layers on loyalty rewards, and provides the necessary financial tools for consumers to participate and make a financial difference in their lives. This is not to say the vision will be easy to achieve. Execution, competitive forces, and regulatory changes will likely be substantial hurdles that they will have to overcome. The opportunity does exist, however, but it's over to Block to achieve it.
If you enjoyed this episode of Redefining Active Investing, please don't forget to follow us on Spotify, Apple Podcasts, or wherever you get your podcasts. And please remember to read the disclaimer in the show notes. If you would like to learn more about ECP Asset Management and the way we think about investing, please visit our website at ecpam.com, subscribe to our blog, or follow us on LinkedIn.